folks, welcome to episode 11 of Defining Talents. I'm so thrilled to be here with Sydney Thomas, the founding GP at Symphonic. She's going to talk about so many exciting, incredible things. But I learned about Sydney probably 6 months ago when I read some of her posts. So follow her definitely on Substack, and was learning about how she is committed to this pre-seed space. She's thinking about ecosystem building when it comes to startups, kind of has that lens from funding. And I wanted to bring her in to talk to all you founders to think about what are we thinking about when we're pattern matching for success, when we're placing bets on founders, because it's so similar to what y'all are thinking about when you are placing bets on your early foundational team. So Sydney, welcome to the conversation.
Thank you so much for having me.
Yeah, stoked to get into your background, talk a little more about Symphonic, the work you're doing there. But let's get started how we always do here. And I'd love to hear, when did you start thinking about talent and team building as part of your career?
Oh, wow. Honestly, I've been thinking about it ever since I've had a career. And I think largely, when you're more junior, you think about it more in the terms of your bosses. You think about, my boss, I wish they would have done this or this or this, or when I become a boss, I'm going to do this and this and this. And so I started a list of all of the things that I would do when I was the boss, when I first got into my career in my, late teens, early 20s.
Oh, amazing. Yeah, I'm curious. Are there things on the list that you're like really proud that you've shifted?
Oh, wow. I'd say the first one is I'm a very sensitive person. And so I am I can read the emotions of folks who are on the team. And oftentimes what that led when I was a more junior employee was to just doing too much, taking on too much. And so one of the things that I knew that I needed and that I wanted to create when I was a boss was a sense of boundaries. And that's something that we've been really good at developing at Symphonic. It's just like, when you're at work, you're at work. When you're at home, you're at home. We don't have to always do all the things intertwined, because I think that's a really tricky balance, especially when you're in what I call this passion economy, when you're doing what you love.
Ooh, that's huge. Yes. So much of us love that work, and that's why we're in the startup space specifically. Oh, I love this term, passion economy. That's huge. Yeah, it's so hard to separate this, right? My daughter is 6, and she's really quick to tell people, my mom's the boss. And I love that. And I love that she's getting this side, to see this side of me. But then also I'm learning that I'm not a great boss when I'm also a parent. I really need to separate those two pieces and focus in on that one thing I'm doing. Otherwise, I'm a pretty lousy parent and a pretty lousy boss at the same time.
Mm-hmm.
Well, going a little bit more into your background, can you share a little bit about kind of how you got into this space, as well as like, what are you working on today at Symphonic?
Yeah, so I got into venture capital through a really interesting career. I have spent about half of my career in the public sector, now half of my time in the private sector. When I was in the public sector, I saw how impactful the government can be on supporting folks who I like to call, the little guys, the little gals, the little people. And when I started seeing how the lines blended between the private sector and the public sector, I saw that they actually both can have similar interests in supporting the same people. And so I decided to check out what was going on in the private sector to learn more about how I could get involved and support the same aims. Transitioned into venture capital almost 10 years ago, and was just extremely curious, talking to as many startups as I could, starting a podcast around companies that were focusing on, the theses that I cared a lot about. And through all of that work and research, I developed my own thesis, which led to the launch of Symphonic. And so much of what we focus on Symphonic is closing access gaps around health and wealth for overlooked communities. And we are starting to develop sub-theses to get really specific around what that means to us. And because we've now invested in almost 7 companies and have a growing portfolio, and we're really excited to continue to this work.
Amazing. Yeah, and I just wanted to call out, I read your article today around kind of looking at that public sector plus private sector. Where are we replacing other services and where are we kind of enhancing them? And that ties a lot into, the work we do at Hustle Hunters, where our, top line, bottom line, however you want to put it, ethos, probably both, is diversifying innovation and realizing that if this innovation economy, kind of this passion economy continues to be really diverse and have lots of different lived experiences at the table, we're going to do great things kind of for the entire population. If we continue to approach this from a really homogenous perspective, we're going to exacerbate inequities. And that's definitely not the goal of what I'm about. And I think, Sydney, you kind of bring that level as well. So you've really focused in on kind of this really early space in the VC world, kind of that like pre-seed company building and funding that, so often folks even use as a stepping stone. Can you talk a little bit about the magic that happens in this segment of the ecosystem?
Yeah. So for us also to put some definitions around it, I think there's also a lot of general, there's just a lot of words that don't really mean a lot of things in venture. And so pre-seed can get conflated to seed, seed can get conflated to Series A. Who knows what Series B is, honestly. And so the way that we talk about the early stage economy, the early stage investments that we make in the early stage that we play in is more around where is the company in its own growth. So pre-seed to us means not exactly that you have a pitch deck. It's actually that you've developed an MVP, you've launched a product in the market, and you have your first customer identified, and you're raising that first tranche of capital to help your company grow. The reason why we're not excited about companies that are have just a pitch deck is because we have seen the explosion of low code, no code tools available to founders and to anyone, honestly, for cheap or free. And so the barrier to launching a product has actually, thank goodness, because of technology, decreased significantly. And so what we are looking for, and so who we're weeding out by having that barrier is the folks who are just like talking and aren't particularly interested or equipped to do the doing. And we're really excited about focusing on folks who are honestly just the doers. And frankly, what that over indexes on is largely women, underrepresented folks, the folks who don't get the benefit of the doubt by just kind of talking, the folks who have to prove more in order to be taken seriously. We're really excited about giving those folks a chance because we know also that they're often building pretty much in the darkness. We're seeing some of the research that I've done in the past is that women, people of color, underrepresented folks generally have strong KPIs when they're growing their company. However, white, more of the homogenous community gets higher valuations for fewer KPIs or lower KPIs. So the expectations for those folks are actually quite lower. And we think that's actually exactly to your point, Nikki, earlier, that doesn't set us up for a good business. That doesn't set us up for really having a burgeoning, innovative ecosystem. And so we are excited about prioritizing and focusing on the founders who are also builders. And most of those just happen to also be underrepresented.
Yeah. And I love this notion that you're doing this not as a like pat on the back, look at us doing good for humanity. Like, this is a business decision. Like, y'all are building a stronger portfolio because you're thinking about, great, how do we help these founders that have really strong KPIs actually grow even more with that access to capital? Because they've already shown us that they can do. So this search for doers and builders, I'm laughing a little bit because pretty much every single conversation I have with a hiring team with a founder is like, I need a doer, I need a builder, I need someone with that ownership. So it's so many of the same qualities. And that's kind of why I started this podcast, is to talk about what are those different pieces. So you mentioned someone who's able to like show you that they actually went and used those low code tools to actually build this MVP. Can you talk to me a little bit more about what else do you see when you're thinking about pattern matching within some of these founders that, in your 7 portfolios that you've invested in? What are some of those pieces that stick out to you?
Yeah. So one of the things that we're really excited about is folks who have a really strong background in working in serving the community that they're looking to serve through the company that they're launching. It doesn't have to be that they've done the exact company before and something happened and they've pivoted a little bit, but it could have been in the public sector. It could have been in an operating role. It could have been in a number of different capacities. But what we want to see is this passion for and this expertise in the community that they're serving, because we believe that enables them to have an unfair advantage in having really unique insights on what these consumers need that other folks who are starting a company more as a, I like to cheekily call them MBA class projects. I did an MBA. I did one of these MBA class projects, but I think that, the MBAs think after 2 weeks of researching an idea that they are the experts, and that is just not true. I'm really excited about people who have been working on problems that are facing the community that they're serving through launching their company for 5, 10, 15 years. And so also really excited about investing in older entrepreneurs. I think that's another thing that a lot of folks get wrong in the VC ecosystem, is that you think you need the young Mark Zuckerberg, the person who's just coming out of college or didn't even finish college. And actually the research shows that the most successful entrepreneurs are actually over 40. And so we're really excited about investing in older founders as well, because they have a deep well of expertise.
Yeah. And so much of that is trust building, right, within that community that we're serving. And I find that I like this unfair advantage that you already know them. You've already taken some of the steps to building trust, because trust takes a long time to build, to ask the real questions. I was living in Kenya for a little while, and I loved learning Swahili, was very stubborn at learning it, to the point where like my American accent was humorous, and I would tell jokes so that when people laughed at my accent, I was like, look, I'm so funny. They're laughing at my whatever. But I would meet so many of these Americans who were there in aid work who didn't speak any Swahili, and they would ask me to order for them. And I'd be like, wait, what do you? And then I would ask them, like, what do you do? And they're like, oh, well, we survey folks in the slums to figure out, what they really need. And then I remember being like, wait, in their third language?
Right.
English is their third language. And they're like, yeah, we've never had a problem before. And it was kind of this moment to me like, yeah, great. Folks have taught each other what the buzzwords are that need to be said. But it was kind of this like shocking moment to me that you're not actually learning what really is needed there. And not that I was the person that could do that, but at least, I'd made that one step to thinking like, I might not know your first language, but at least I got your second language before the third one, and learning that, a community can have a story. My friends, when they pass me in the street, I'm like, yeah, I'm good. But if you ask deep down, maybe there's a lot more behind that. So love exploring this a little bit more. And I know you've written a bit about the equation of like company traction plus founders' ability to succeed being really critical when you're evaluating companies. Can you talk to me a little bit more about that?
Yeah. And just to double click on what you were saying too, that humility and empathy, I think, is something that we look for a lot with founders. It's like, do you care enough to be seen as, not the expert? Because I think learning a new language requires a certain level of humility. You might have to ask these folks who you're serving how to say words, how to, say different phrases, ask them for their help, which is really putting, I think, your shoe on the other foot. That might feel particularly not comfortable to start. But that's the point of starting a company. It is never comfortable.
Yeah. And that vulnerability, I found that like as a leader, every time I've led with vulnerability, when maybe there's like a part of me that's thinking like self-preservation, like, no, don't show anyone that there's problems or that you don't know an answer. Pretty much every time I realize I lead with vulnerability, good things happen. And my team either has my back, or later down the road, they'll share something. And I'm like, wow, I can't believe you shared that with me. And they're like, yeah, well, of course you shared this with me. And I'm like, oh yeah, that's right. Vulnerability begets vulnerability, but someone has to start. And often it needs to be a leader.
Exactly. Okay, remind me of your last question.
Yeah, okay. So let's talk about company traction plus founders' ability to succeed.
Mm-hmm.
Tell us about that equation. How does that play out for you?
Mm-hmm. So when we think about company traction, it really is the thoughtfulness around having launched something, have that first customer, secured. And then when we think about the founder's ability to succeed, this is the wild card. This is a question that we do not have an answer to. And so a lot of the answers to that question, a lot of what we're trying to figure out around that question is, do we think this founder has enough information, enough interest in this problem? And I think that the interest piece is also a reason why we generally end up investing in more underrepresented folks, is because when folks are really connected to the community that they're serving, there's this vested interest in figuring out that company. If it's a problem that you saw your uncle facing growing up, or your mom facing, or your community member facing, it's a very personal problem that you're looking to solve, instead of back to the business school idea, instead of this idea that seems cool in theory, but then when the times get tough, a Google job sounds really fun.
Yeah, I'm thinking so many of the folks who have that like really strong understanding of what that challenge is, I'm finding when I think back through people I've met in my life, I love Kate Torgerson at Milk Stork, her story of just coming back from a business trip and being really mad that there wasn't a better solution to get her gallons of breast milk home. And this like almost accidental entrepreneur of like, I just assumed that the solution existed when I realized it really didn't. I couldn't go another day without this solution being created for someone else. But often, we know these maxims that the best car mechanic doesn't run the best mechanic shop, because that's a totally different skill set. Can you talk a little bit about like how much business background are you looking for some of these founders when you think about their ability to succeed?
Mm-hmm. Honestly, back to the vulnerability piece, you don't need to have everything. You don't need to be perfect, but you need to know what you don't know. And so there needs to be a certain level of, you know what, I'm actually not the best in this space. And so I found a co-founder who actually fills these gaps for me. Or, oh, actually my business acumen it's pretty good, but there's some things I could learn. I'm going to look really hard to find a chief of staff. Do you know of someone who could fit this role for me, or a head of growth? And so I think the expectation for us is never that the founder knows everything, but that they know enough of the business to be really, I think, dangerous, and also acknowledge what they don't know so that they can hire the right folks around them to help them get to the right point.
Thanks for that. I'm also curious, like, what other qualities, when you're kind of looking through that vulnerability, that knowing what they don't know, the builder, what have you been surprised by? Where you're like, oh, I might not have realized that was an important quality in this work. You've been here for a decade now.
Yeah. Oh wow, it's such a good question. Oh, it's such a good question. One of the things that I think about is, there is a certain expectation in venture that you're going to build this company to be a $500 million to $1 billion outcome. And so when I'm looking at founders, sometimes there's this scale. And so you can become so overwhelmingly obsessed with finding the most perfect solution for this community, because it's so connected to you and so connected to all of the folks that you know, that you lose sight of the fact that you're also building a business. And so there requires a certain amount of rigor in your own decision-making process that enables you to get very clear about what you're building and why, and the trade-offs that you are having to balance by launching a venture-backed company. And I think that sometimes I have seen folks get too far down the rabbit hole and being too obsessed with being perfect instead of being good enough. And I think that there's a whole number of reasons why those folks are also generally women of color, because we're held to ridiculous standards. And so there's this, I think, forcing function that I'm looking for in founders around like going when the product is good enough, when it's ready to go, building at a price point that is good enough. It's not going to be free because you need to make money, but you're going to be serving these communities in a very important way. So being thoughtful, but not having to hold yourself to these absolutely ridiculous standards.
Yeah. And then how are you thinking about supporting founders at this stage? Specifically when we're looking at, specifically like Black women in your network, at these historically excluded founders and underrepresented groups of founders, who might not have the same, network and privileges that someone with their napkin scraps is able to kind of get traction around. How do you, beyond a check, what are some of the pieces that you found have been really valuable in what you've built at Symphonic?
Yeah, so I'm so grateful to have partnered with Shruti Shah, who is a Swiss Army knife of sorts, and she supports founders that we back post-investment around all things ops. How can we get them that outsourced COO talent as quickly as possible? And also that second-time founder insight. She launched her own company, grew it from pre-seed to Series A. And so she has this wealth of expertise that she's able to offer founders post-investment that gets them, I'd say, out of their heads. Often for those folks who are a little further down that, I don't know what you could scale. And really grateful for her, and our founders have really enjoyed working with her.
Okay, I'm glad to hear that. Yeah, it's so much of an ecosystem. We think about that in talent too, right? Like, so excited to celebrate that someone accepted an offer, but the journey is just beginning. And there's so much work that needs to go in. We had someone on the show recently, I think Matt Vallone, in one of the earlier episodes, and he talked a lot about how a mishire doesn't mean you hired the wrong person. It might also mean that we didn't give them really good support, or the support that they needed, or we didn't ask those curious questions to figure out what that was. That, there's a lot of things that can go wrong, unfortunately, not as many that can go right. So walking that tightrope sounds like something that you spend a lot of time thinking about to make sure that your founders don't just start well, but continue. And then can you share a little bit about what is that interaction, and what is, when you think about a relationship with a new portfolio company, how long are you thinking about? So we've got your MVP, you got one first customer. How long are you really actively thinking about this being like your wheelhouse stage with them?
Yeah, and it's one additional point to your last point too, around the hire not being perfect. A lot of the founders that we're hiring are first-time founders. They might not have hired anyone before. And so the expectation too is that they're learning as they are working with people, figuring out what type of manager what they want to be, what type of leader they want to be. And so we don't expect you to get it right from day one. You're probably going to hire the wrong person. You're probably going to have to fire someone. You're probably going to have to do a lot of things that are just gross, because people stuff is hard.
Yeah.
And what we expect that we are able to support you with is on that growth curve. It's not the always getting it right, but also it's the helping you get up after you've realized you've done something that you wish you hadn't. And so we support founders post-investment for about 12 to 18 months with the first check. And then we are really excited to continue working with the founder after they raise that next round even longer. And the reason why is we think we should invest a lot of money into companies that we think are going to be really successful. And so we over-index on doubling down on our best performing companies. We expect a certain number of companies to fail after we invest in them at pre-seed. That's just the way of the land. And are really excited to continue supporting those who are able to get over that hump and get into that seed bucket.
Great. And then I'd love to hear a little bit from you around some advice you would give here to early stage founders, especially as they're kind of developing that early team, that early company, that early idea.
I would say get as much feedback as you can as quickly as possible. And there's so many scrappy ways to do this. Maybe it's posting in something on Craigslist. Maybe it's posting some questionnaire on Facebook. Maybe it is connecting with that person on LinkedIn for a coffee chat. But there's so many ways to actually test your idea in a really thoughtful, creative, affordable way in the early stages that doesn't require you to have tens of millions of dollars of venture capital raised to launch your company. And so I'd say very focused on companies, be really focused on what you can do with where you are.
Yeah, and then as you mentioned that some of these founders like haven't done that hiring before, I find that my job is like 1/3 recruiter, really 1/3 therapist, and 1/3 project manager. I'm learning kind of being in the hiring space as we spend a lot of our time thinking like, yeah, what's that baggage that we bring into the hiring conversation? Because this is the people business. And as these founders are starting to build out, that persona that, they're part of this passion economy, they have that really compelling interest and connection to the community that they're solving problems for. What are some of the other things that you would recommend that these founders are starting to, spend some time focusing on and kind of building out that persona of themselves?
Yeah, I mean, that's a great point. You are wherever you go, there you are. And so self-awareness is key. And so if you don't have your own support system of maybe it's a therapist, maybe it's a coach, maybe it's a group of friends who you have as a really trusted sounding board to help you with getting out of your own way in some of these big questions that you're having to answer. I think that's one of the biggest things that I recommend to founders. There's actually a report done that said that surveyed the most successful founders, and the one thing that all of them had in common was community. And so you really need to develop your well of community before you jump out into the world on your own, because it's a really hard job you're signing up for. And so how do you make sure that you have the people around you to help you when the days are, long?
Yeah, I've been a huge fangirl on the Rachel Rogers train right now and just read her book, We Should All Be Millionaires. And I'm loving so much of the research she highlights around that. Exactly what you're saying, Sydney, that, we're some of the people we spend our time with, and they're the ones who are going to carry us through. And quick shout out here to Leslie, Felicia, and Lori, my little founders crew. We've been meeting for about 2 years now, even remotely and occasionally in person. That's been so big for us. Well, to take us home here, Sydney, I could just ask you questions all day. But do you have any hot takes on this pre-seed stage of company building or funding right now?
Mm-hmm. My hot take is that too many founders are getting too much money for too little progress. And so I think there's a lot that you can build on 500K to $1 million. And a lot of founders are looking for 2 to 3 to 5 million in these early stages. And I don't really understand why.
Love that. Yeah, really intrigued in that piece. And I can totally understand your lens and let's build something. There's so many options these days, which is so great. And then lastly, what makes you a great teammate?
Aw. I think it is my sensitive nature. I really like knowing how you really, really are. And if you're not telling me, I will probably keep asking you because I'll notice that you're not telling me the full story. And so I really enjoy being deeply connected with the folks who I work with. And then also turning off at the end of the day and doing my own thing.
I love that. I love that. Give your cat some love, Sydney.
Exactly.
Well, thank you so much for joining me today. I think we went all over the place, but talked a lot about vulnerability and self-awareness, specifically in that founding profile, talks about this passion economy. And really highlighting our interest and connection to the community and really why we focus in on this work. So thank you for your insights. For folks who want to keep following you, y'all, Sydney writes great content. Highly recommend it. Sydney, how can we follow you, almost creeper stalk you, and learn from you over time?
Thank you for the shout out. I love talking on LinkedIn. I'm posting there a few times a week, and also have a Substack that is more of a long form, once every quarter type of updated content. So for the quick fix, LinkedIn. For if you want to nerd out with me, it's Substack.
Yeah, I'm deep on that train. So thank you, Sydney. Really appreciate you. Hope y'all got some insights as well here. Thinking about the team building space, specifically from looking at a founder, what we're looking for in terms of how we pattern match for success there and those outcomes. And then also taking that step forward as founders. What are we looking for in that early team? Because it turns out there's a lot of similarities there. Well, thank you again, Sydney. Really appreciate your time today.
Of course. Bye.